Hi everyone, my name is Darya Hoover and I'm a realtor with Keller Williams Realty East Bay, and I just had a seminar with Anna Kussmaul, a lender and a mortgage officer with Stonecastle Mortgage out of Denville. Please feel free to watch a portion of our seminar here. Thank you so much.
So clear to close. Typically it's anywhere from 10 to 25 days during the transaction. Your closing agent, again, is the escrow officer. They will prepare your closing documents. Your closing date impacts the final closing costs. Interest is paid in arrears. So if you close later in the month, you're probably going to pay less days of interest. If you close in the beginning of the month, you're going to pay more days of interest. And so that could affect your closing costs. Again, the escrow agent or the closing agent will set up a notary that's convenient for you, or you will sign with her in her office. And you'll sign the official loan documents. Always bring your non-expired driver's license or ID or passport with you. You have to have it. Every notary has to verify who you are when you sign. Signing day, best day when you're buying your house. Again, government issued photo ID. You will also need the funds to close. So they will tell you how much you need, and you're going to have to either wire those funds or bring a cashier's check with you. You cannot use a personal check to pay your closing costs. At closing, so you sign your loan documents, escrow will send all the loan documents back to the lender and they will request the funding date. The loan does have to record in order for you to get your keys, which we talked about. Sometimes it's the same day, sometimes it will be the next day. It just depends on the county. Not all counties, smaller counties take a day or so to record. Larger counties usually will do a special recording same day. And that's it if you have any questions. So at this time, if you have questions, it would be a good time to probably look up Darya and I and see when our next homebuyer seminar is. You're more than welcome to, you've kind of seen what we talk about, but if you have questions, more questions about down payment assistance, you want to see what it takes to qualify, you want to get qualified at the seminar, we would be happy to do that.
I have some questions for you.
Yeah, and she has questions for me.
Yeah. So I read recently that the debt to income ratio changed. It used to be 50%, but now it's 40%, right?
Yes and no.
So can you clarify that?
So basically, if you are a VA, you can actually go as high as 55% debt to income ratio. If you are FHA, they want you to be 50% and less. But again, some FHA, it's a very complicated thing, but you can go as high as 53% on an FHA loan. If you're doing down payment assistance, they typically cap off anywhere between 45% and 40%. If you want what she's talking about, if your debt ratio is 40% and lower, then you will actually get a better interest rate. It helps your interest rate. But you can still get a loan if you're above 40% debt to income. Your interest rate will be a little bit different.
Okay, and also the credit score, I read that starting in mid-March, instead of 740, it should be 780.
780, it is going up. So if you want to, if you actually get they're going to break it into tiers. So 700 to 720 is a different rate, 720 to 740 is a different rate, 740 to 780 is going to be a different rate. So obviously the more that you go, the higher that you are, the better rate you're going to get. So that is true.
And speaking of rates, some clients of the banks can get lower rates, right? Only because they're clients of the bank, right?
Yes. So it's typically in a jumbo market. If you're looking for a true jumbo loan and you are going to, sometimes there are certain banks, if you're already a client of theirs and you have a lot of money in the bank, it is worth going to talk to them and see what they would offer you. Sometimes they will offer you a mortgage that the market can't touch just because they want to retain your services and they're willing to take the rate as a loss leader just to keep your business. So that is true.
And what banks would that be, for example?
Banks that will do it, Wells Fargo right now, if you don't have an account with them, they won't help you. They just announced they were getting out of the market, but if you have an account with them, they would offer you a mortgage, maybe a rate better than mine, maybe not. First Republic has very good rates. Union Bank will do, well, Union Bank's not there, US Bank will offer you a good rate, but again, they're looking for client wealth. That's really a client wealth thing. If you have an investor with them or something, then they're probably going to offer you a really good rate, possibly.
But if you don't have that much money in the bank, they will not.
No, they will not. It's really only for their investment portfolio. They're trying to keep your cash and keep you happy to keep you invested with them.
And you said that you can get up to 20% down payment assistance.
So CalHFA has a new program that they're coming out with. It comes out March 27th, so there's probably more questions than answers, but it is, you can get up to 20% down payment. It is what they call an equity share program. So the way that it works is they will give you 20%, you put the 20% down, it's a silent second behind your first mortgage. And then what happens is if you decide to sell the home or refinance it down the road, you have to pay back that 20% that you borrowed. You also have to pay back 20% of the equity that you would have built up in that home when you go to sell it. The program gets the other 20%. So it's good to know all of the rules because maybe you're not willing to give up 20% of your equity. But CalHFA does have a program where they'll give you 3 to 3.5%, anywhere between 3 and 5% down payment. That might be a better program. There's no shared equity in it. You do have to pay it back, but you don't pay any monthly payments and you only pay it back. It's a silent second, so you don't pay it back until you sell your home. So 3% and 5% is a lot easier to chew off and you're still getting your loan versus paying back 20% and sharing the equity, in my opinion. But again, there's several different down payment assistance programs.
And because rates are changing a lot, you said even sometimes several times a day, that means for buyer, it doesn't make sense to look up the rates, right? Because they change anyway.
They change every day, and when you look up rates online, they're not going to be exactly tailored to what you are. Usually when you look up rates online, there's points built in to get that rate. You might not qualify for that. There's also restrictions. They might be quoting a rate that's not your credit score, or they're quoting it in a county that's a different county than you're looking for. Believe it or not, there's different county limits. There's a lot of factors that go into all of these things. So again, you want to talk to a professional to get your rates. You don't want to go online or listen to what the news media has to tell you because I guarantee it's not correct.
Also, you are licensed not only in California but in some other states. What are they?
Yes, so I am licensed in California, I'm licensed in Colorado, I'm licensed in Arizona, Oregon, Washington, Nevada, and Idaho.
Wow, that's a lot.
Yeah, working on Georgia.
Okay. Just it's good to know so that people who live in those states could also
Yes.
get pre-approved with you and get a loan through you.
Yes, so if you're looking to move out of the area or you have relatives that are looking, I can definitely do your loan in all of those states as well. And I can do all of those loans that we talked about, VA, conventional, FHA, jumbo. All of my lenders also lend in those states as well.
I see. Thank you so much, Anna, for joining me for this seminar today. And
Thank
I'm
you,
sure-
Darya. It was a pleasure to be here.
Thank you so much for being here. So if people have questions, please feel free to ask us under this video on YouTube or on social media or through email, through anywhere.
Yes, look us up, DM us, text us, however you want to get a hold of us. We're always available.
Yes.
Have a great evening.
We are one phone call away, one message away,
Yeah.
email.
Yes,
We're
exactly.
always there for you. And thank you so much for your time.
Thank you.
Bye, everyone.
Yay.